News conference that's expected. We'll bring it to you as it becomes available. In the interim, we've got shares of Canada's largest natural gas producer rallying, as we showed you, and Encana's CEO is rolling out an aggressive new cost-cutting plan, slashing 800 jobs, the dividends cut to 65%. Keith Schaefer is the editor of Oil and Gas Bulletin, and he tells us that this is a great first step. He joins us now. Good to have you with us, Keith.
Hi, Michael.
How is this a great first step?
Well, I think what management has done here is show the street that they can think a little bit outside of the box. I think what the market's latching onto today is this idea of a royalty company for their southern Alberta assets. You don't see that in the oil patch in Canada very much. In fact, Freehold is really the only other public company that does this. So I think it took the street a little bit by surprise. It makes a lot of sense. They're taking an asset that really has very little intrinsic value to their company and almost no market value, and really turning it into something that could have a $2 billion value in the market if you judge the value of what Freehold gets, which is, it's about $180,000 a flowing barrel, about twice what normal oil producers get. So it was a smart move, took the street a little bit by surprise, and now the street's going to be thinking about, oh, well, what else are they going to do? So I think that's why you're seeing the stock respond today.
Oh, okay, because I'm
looking
why
at...
you're... Please continue.
And why you're seeing them, they were allowed to cut their dividend probably a little more than the street wanted to and get away with it today because of the innovation they showed in this deal.
So with the increase that we have seen so far, is this an entry point for someone who's been sitting on the sidelines? Do you buy this stock, particularly since they cut a dividend and the stock price goes up?
No.
Why not?
I'll tell you that I'm long at lower prices, but I'm not tempted to buy the stock today for a couple of reasons. One is that there's obviously some euphoria in the market, and in between news is generally a better time to buy. But also, I think we need to remember that fundamentals in oil and gas right now are going lower. Both gas prices and oil prices are trending lower. This team does have a long way to go. It's not like this stock was super cheap and now it can have a big rally. It's basically traded at peer group valuations with less than peer group economics, so there's still some catch-up room to do. I think there is time to see how well management can perform before you really want to jump in whole hog here.
And historically, the market hasn't rewarded the Western Canadian producers who shift from dry to wet.
It takes a long time. Now, on the smaller side, which is what we're more used to, that takes a really long time. So they might give Encana the benefit of the doubt a little bit sooner. But the reality is that they haven't set the bar very high here. They say they want 70% of their cash flow to come from oil and liquids. Well, it doesn't take very much production in oil and liquids to make that happen because there's basically no free cash flow in dry gas. And they say they want to increase cash flow per share by 10% a year. Well, that's great. There's a lot of companies already doing that with similar valuations and less risk. So I see the big upside here probably being in 2015 when they'll really be able to get moving on the Duvernay, where you've got really high condensate rates and the economics of that commodity are very strong. You'll see them have de-risked a lot of their Tuscaloosa shale down in Louisiana. That looks like it's shaping up to be a great play, but this company isn't out of the woods yet. And to dip your toe in might be a good idea, but to go whole hog because of this news isn't something that I'm enticed to do.
Keith, thank you for your insight. Good to have you with us.
God bless.
Keith Schaefer, editor of Oil and Gas Bulletin. Still ahead on the close, what does the weaker than expected earnings from Mosaic Group mean for fellow fertilizer makers?